All right, let's talk about crypto. It's this world that's just, famous for being confusing. Our goal today is super simple. We're going to cut through all that jargon and give you the clear, straightforward basics you need to really get what this is all about. So, let's dive in.
You ever been in one of those conversations about Bitcoin or Ethereum, and you're just kind of nodding along, but inside you are completely lost? Trust me, you are not alone, not even close. It's a complicated space, but hey, by the end of this, you're going to have a really solid foundation to stand on.
So, to build that foundation, we have to start at square one. The big question, what is cryptocurrency anyway?
Okay, this gets right to the heart of it. At its core, crypto is just money that only exists digitally. But here's the part that changes everything. The big idea, it's totally independent. Unlike the dollars or euros in your bank account, it's not issued or controlled by a government or some giant bank. No one's in charge.
So if there's no bank, where does the money live? Well, it's all recorded on something called the blockchain. And the easiest way to picture the blockchain is to think of it like a giant public digital notebook. Every single time someone sends or receives crypto, a new line gets written in that notebook for everyone to see. And the amazing part is that there are thousands of copies of this notebook on computers all over the world, and they're all cryptographically locked together. That makes it nearly impossible for any one person to cheat the system.
And this right here shows you that huge difference. Traditional banks, they're centralized. One company is in charge holding all the records. They're the gatekeepers. The blockchain, on the other hand, is decentralized. The power is spread out across the entire network of computers. To get a transaction approved, the network has to agree. That's what makes it so open and so incredibly hard to hack.
Okay, I know what you're thinking. A network with no boss sounds like total chaos, right? So how does it actually work? How do transactions get approved, and how are new coins even made? Well, that brings us to the engine room of crypto.
It pretty much boils down to two main systems. You've got the original, which Bitcoin uses, called proof of work. And I think of this like a massive global competition where super powerful computers are all racing to solve a really hard math puzzle. The first one to solve it gets to add the next block of transactions to the chain, and for their trouble, they're rewarded with brand new Bitcoin. The only problem? It uses a ton of energy. That's why a lot of the newer cryptocurrencies like Ethereum have switched to proof of stake. Here, instead of a race, coin owners stake, or lock up, some of their own coins as collateral. This proves they have skin in the game and gives them a chance to be chosen to verify transactions and earn rewards. It's a much greener way to keep the network secure.
So we know what it is and kind of how the engine runs. But what's with all the hype? Why are so many people putting their hard-earned cash into this stuff? Let's talk about the hope, the hype, and, well, the reality.
It really comes down to three big camps. First, you have the visionaries. They see crypto as the actual future of money, a way to send funds anywhere in the world instantly without a bank taking a huge cut. Then you have the pragmatists. They see it as digital gold, a scarce asset that could protect their wealth from inflation. And then, of course, you've got the reason that makes all the headlines, the chance for absolutely massive returns.
And yeah, this is the slide that gets everyone's attention. In the very beginning, a single Bitcoin was worth less than $1. A little more than a decade later, it shot past $60,000. I mean, that kind of growth is almost unheard of anywhere else. But, and you really need to hear this, that is only half of the story.
Because with that incredible potential for reward comes huge, and I mean huge risk. The crypto market is absolutely not for the faint of heart. What goes up like a rocket ship can and very often does come crashing back down just as fast.
The number one word you have to burn into your brain is volatility. It's just a fancy term for insane, unpredictable price swings. It's not weird at all for a major crypto to drop 20, 30, even 50% in a single day. You have to be mentally prepared for that kind of wild ride.
And it's not just the price swings. You got to know that this space is still a bit like the Wild West. Scams are everywhere, people promising guaranteed returns, which, by the way, is always a giant red flag. And most importantly, you have to understand that you are your own bank. If you lose your private key, which is basically the master password to your crypto wallet, your money is gone forever. There's no customer service to call. There's no forgot my password button to click. The responsibility is 100% on you.
Okay, I know. After all those warnings, you might be feeling a little freaked out, and honestly, that's a good thing. A healthy dose of caution is exactly what you need here. But if you're still curious, there is a smart, safe way for a beginner to approach this.
Here it is, your 5-step strategy. Step 1,
Learn first. Do your homework. Watch explainers like this one. Step 2. Use trusted, well-known exchanges. Stick to the big names. Step 3, and this is maybe the most important, start small. And I mean small. Invest an amount you'd be completely okay with losing. 20 bucks, 50 bucks, whatever. Think of it as the price of admission to learn. 4. Secure your coins. If you decide to hold for the long term, learn how to move them to a secure wallet that only you control. And finally, step 5. Diversify. Crypto should only ever be a small, speculative piece of your overall investment portfolio.
Look, whether you decide to invest a single penny or not, one thing is becoming pretty clear. The technology behind all this isn't going away. It's already starting to change finance, art, gaming, the internet itself. So the question isn't just about hype. It's a real challenge. Are you going to take the time to understand this massive technological shift before it really goes mainstream? Now that is the real investment.